Major earnings releases just dropped for three big ASX stocks and buyers have taken notice. But the best part is that these stocks are sitting at the cheapest levels we've seen in years. And that makes them a contender for Opportunity of the Year. As always, we'll show you our signature stock market playbook, backed by Australia's leading government-accredited share trading education and supported by major media outlets Australia-wide. I'm Philip Tortevsky, joined by senior analyst Pedro Banales, and we are Wealth Within. Good evening, buddy.
Good evening, Phil. My God, February has come quick, hasn't it?
Yeah, earnings season is upon us, and here we are. We're going to be talking about three major stocks, diving into the charts and dissecting their earnings, and some of it might surprise you, especially the third one. It's not what is as it seems for some of these stocks, but let's get straight into it. Now, first up, we have REA Group, which came out with half-year results today. Now, REA delivered a strong half-year result with revenue up 13%, earnings growth across every region, and margins holding firm above 50%. Importantly, the cash flow remained strong, debt stayed low, and the company reaffirmed its full-year guidance. Now, this wasn't a growth driven by cost cutting. It was broad-based, global, and supported by rising dealer activity and deeper product adoption. Now, overall, it's a good result that confirms the business fundamentals remain very strong leading into the second half of the year. Now, that's the important part first, Pedro. Let's get to the chart and have a good look in terms of what is happening with REA Group, because this is the part for me that gets really interesting, and some people may be looking at this and thinking, Phil, what are you doing? The stock is currently in free fall, but it's fallen around 42%. We're going to get into this fall in a second, but I mean, when I look at a stock like REA Group, a company like REA Group, it's always important to go over these earnings and see, has something structurally been broken to warrant these kinds of price capitulations? Or is it, really driven by sentiment right now? And when you look at that latest report, Pedro, the company, hasn't reported anything unusual in terms of where it's headed in the future. And throughout history, it's been able to prove, as you can see, to be a really strong growth stock, quite dominant in the space that it's in. And I mean, the report came out today. What's quite interesting is we had last week a really significant fall on the stock. Right now, and we're on the weekly chart, mind you, on the middle of Monday, the stock opened 8% higher on the news, went up to about 14%, and now it's currently sitting near the open. So it's about 7% higher. Buyers have come in to buy up the news, but as we always say on this show, it's all about confirmation. Just one day or 1 week isn't going to make the determinant on whether this stock has turned the corner. That being said, this is definitely the moment to be looking at it, because if this is a sentiment-driven correction, not driven by any structural breakdown, well, a 43% fall coming into a major level on this momentum line where it's really held the stock up throughout history, this is one of those moments where it's throw on your watch list and, watch me right now, because when we go through the bigger recent corrections that it's had throughout history, that was 34%. We go through here, that was 50%. Really, we haven't seen anything since 2018 or 17 higher than a 50% correction in the trend. And so now we're approaching those levels that make this very interesting in terms of what comes next and whether or not we've indeed found the bottom. So for me, I like the fact that there's some buying coming in. I think it's watch this space, see how price unfolds here. It might be a few weeks to a few months before the real confirmation comes through, but time to watch. And going back to that point about these good, strong quality companies that continue to show that, they can continue to show price appreciation. Well, very simply, even if we go back from September 2018, this stock here and earlier, and I'll apply some lines to it, the previous all-time high in 2014, the stock has a bit of a moment, breaks above a second time in 2018, holds above, buyers agree to a new price acceptance. We break through to a new all-time high, and this is just going to continuously repeat. Broke through to a new all-time high in October 20. Buyers agree that, hey, we want to go higher. We reject that previous all-time high, go through again. Fast forward to 2020, breakthrough. Again, where do we find support? On the new price above the previous all-time high, meaning we're agreeing to go higher. Now, we fast forward to today, the previous all-time high was in October 21, and look where we're sitting right now. So this is really make or break for REA Group from a technical perspective, which is why it's so interesting to me. And after a 40 to a 50% correction, there's definitely room for this stock, for those short-term plays, for the medium-term plays, and potentially even for the long-term plays, especially if the fundamental structure, which going by the latest report, seems to be quite healthy. So I want to get your thoughts here, Pedro, on that, and also what you're seeing technically, because to me, this one is definitely a growth stock and has been for a very long time, and maybe now is the perfect time to be looking at it. And for all of you that watch, and I know we're going to get the comments, I'm not saying buy right now. We're saying watch.
Yeah, of course. Yeah, I'm looking for the falling knife comments, which is exactly what we would say to somebody if they presented this stock to us right now. But there's some very interesting technical things that are happening, like you said. We know that the report is good. So under the hood, the stock is sound. Now we're waiting for a technical entry. And really, you've covered it nicely. So I'll just stick to something basic here. And really, this is the longest amount of time that it's ever fallen, the longest and sharpest amount of time. Look, I'm on the monthly here, and it's been falling since September 2025. So that's 1, 2, 3, 4, 5, 6 months down. The last time that I can see that happened was back here in 2022, but the fall wasn't as dramatic. Right now, it's a very sharp fall, back to that momentum here. So like you said, it's back to a previous all-time high, and really the weekly volume is supporting a bit of a reversal here. It could be a little bit of the short covering, but we're still waiting for confirmation. And what excites me is that it's the biggest volatility that it has witnessed since this last move up, which was eventually where it kept on falling. So really have a look at what happens in this area. Let's see where buyers come in, where sellers come in, see if this gap fills again, and we could find some support at around the 24. But once this thing takes off, like you've shown, you can get some real good profit out of it. So 30% wouldn't be off the table.
Yeah, absolutely. All right. Now, before we move on to the next stock, if you want to get an intro into some of the techniques we just spoke about, it's all in this book. It's How to Beat the Managed Funds by 20%. It's free. You just have to pay the shipping. The link is in the comments section below. We do have plenty of it, but as always, if you do want to take things to the next level, please go and check the website out, wealthwithin.com.au. Look at the testimonials, see what the students are doing, amazing stuff right now, and go and check out the education tab where you'll see the diploma, government accredited share trading education. So let's move on now to our next stock, which is Beach Energy. Now, this one delivered an interesting result, Pedro. I know it caught your attention over the last couple of days, and it was something that maybe all is not as it seems.
Oh, it definitely did. They delivered very solid first half results. It was supported by LNG cargoes from the Waitsia project, which is almost to full capacity. It's got a sharp lift in realized gas prices. Production was a little bit lower because of the Cooper Basin flooding, but they are recuperating from that. So they did have the tailwind of higher gas prices. It was helped with an EBITDA of 558 million and an NPAT of 219 million. So the important takeaway from this is that they're cashed up at the moment. So the Waitsia, like I said, the gas plant is now online. It's ramping up. Costs were reduced. The balance sheet is looking good. Guidance is maintained, and it's positioning Beach to be stronger for the second half. So add all this together and having a look at what happened with price, it just doesn't make sense. And this is what we mentioned in our other report about not only looking at the negatives of a financial report, but look forward, look at the forward leading indicators. What's going to happen from now on. They're reporting what happened last quarter or last year, but let's have a look what's moving forward, because that's exactly what's going to move the share price.
And on that, you're happy to go and take a look at the chart, because I know, this is one of the stocks you've been covering for a little while, and it does look very interesting, I must say.
Oh, definitely. This is one that I'm very excited about. So let's get onto the chart and have a look at what's happening now. Here on the monthly, let's start off here, because this is going to show the nature of this range the best. So it has been range bound roughly from around that $1.90, say $2 to round it off, down to that $1.10 level, which has supported the stock many times. And, you can even go back to as far back as 2005, 2006. That's going back a long time. And that was a very important price level for it. And you can see how many times the stock has bounced off here, whether it was support or resistance. It's now at that level, at that critical level. And it looks like it has been consolidating in a tight range, and it's getting ready to do something. It's coiling up like a spring. Now let's go to the weekly chart here, and I'll show you guys what happened on the report. So this was last week, February 6th. We can see that from the open to the close, it was down 7%. Now, the report like that, I don't think it should warrant a 7% down move. And you can see just today, it's starting to, we're recording this on the Monday, it's starting to reverse a little bit. So we'll see what happens. We've got volume supporting this final move. Actually, we've got volume in general starting to come, more and more online. Gas in general, we've seen spikes in gas prices. This is a very strong company. I think that this one is on the precipice of a very powerful move. And you can only, you can look back just recently at 2024, that what types of moves it can have from this price level. And we're talking about, 35%, in just a few months. So definitely this one is one to watch. If it can break that downward momentum, you can see that the highs have been consistently getting lower, but the lows have remained the same. So that's another key clue here. And of course, I can't get too much into the technical aspects. Obviously, we teach all this in our course, but there's a very interesting pattern that I can see that is forming over here. And we have shown these patterns before on this show, and I can tell you that the stocks, went quite parabolic after that stage.
Very interesting stuff. All right, now time for REA Group, which delivered a solid half-year result with earnings growth driven by higher prices and stronger product uptake, despite lower listing volumes. Now, record audiences on realestate.com.au lifted the buyer inquiries and seller leads, reinforcing REA's pricing power. The profits, dividends and capital returns increased, and management remains confident as property markets conditions stay supportive into the second half. But I want to get into the chart here because obviously, yes, they reported, a few days ago. We go to the chart and have a good look at what is happening. And this is another one of those stocks where, very much like Car Group, sitting in a space where they are a dominant player. Warren Buffett always talks about look for the leaders and companies with the really strong moats. But when I look at REA Group, just one look at the share price tells me a lot about what I need to know about how strong this company is and how well management, all of it has been in delivering share price appreciation. And right now, again, we come into this scenario, and oftentimes it's important to note that turning points oftentimes do happen after these periods here, whether they be on the up or on the down, because a lot of what's baked in, as you said, the buying and the selling has happened before the news announcement. And if the scenario here was a lot of selling coming into news, potentially that is the moment now with these latest releases that we could see a reversal. But of course, price action will tell us that with confirmation. So it's one thing to assume, always use confirmation. And if I just apply some momentum through here, it's very evident that this stock really has been running to a rhythm, one through there and definitely one now. This is a little steeper, but we've seen a few touches of that momentum back in 2022. Now we're coming into it, literally bounced off it in 2026, and we have seen some buying. If I put it into some context, the report happened a few days ago, and I'll go on the daily chart. That's exactly what happened during the report yesterday, or on Friday, sorry. Opened from the previous close, opened down 17% when it released earnings, finished, clawed back 11%. So on the day, it was up 11%. That is clear that buyers picked up that earnings report after that initial panic. And so right now, time will tell whether or not we're going to see some sustained buying or we're going to, slowly drift on lower. And this was just a short-term, opportunistic type move by some nifty buyers. But if we continue to hold, especially if we hold this level at 168 where the market closed and start to bounce up, we might as well, or we may have just seen the low. Huge volume come through there as well. It's actually the biggest volume we've seen since 2023, approaching those levels back in 2019. So there's been a lot of activity on this earnings release, and sometimes that's a clue in that, hey, it's probably something. Look at that on the weekly chart. That volume there, hopefully if I zoom that in for you, on the 5th of December, is higher than COVID levels. And you can imagine what was happening in terms of activity during COVID levels. Again, right at another major flush out low. So just be mindful of that. I'm not saying that we're going to reverse tomorrow, but all of the little critical elements that we do teach, again, we're giving you little snippets of what we teach, but when you package it all together, it really helps you make that decision in terms of whether buying or selling is at that right moment. And if you're struggling with that, then and it's speaking to you that you're looking for that kind of help or assistance, then please, again, go check that website out, because it'll really help you take that trading to the next level. But back to REA, what I really like, again, going back with the theme of today, is that good companies continue to bounce higher off previous all-time highs, and very evident. July 16, bang, tested it, went through, and I can keep doing this all the way along, bang, new all-time high. We sit here today and we're there again. So this is the beautiful thing about the 3 stocks we've chosen today. They're at make or break moments, meaning that it's time to watch now and see what comes next, because if history repeats, then this is destined to go for another run up, and potentially, if history holds true, break through to a new all-time high. So when we're talking about opportunity, we're talking about a 50 to 60% opportunity over the medium to long term. But of course, we need to see some kind of reversal here first before we get too excited about that. But definitely 3 to keep on your radar. Pedro, did you want to add anything on this one?
Yeah, I did. So I just wanted to expand a little bit on that volume and the market structure, presentation that you were doing earlier. So we'll get onto the chart and have a look. So I've highlighted here, there's these key reversal levels here where volume has spiked up, and you can see that they coincide before sharp runs. So we had one back here in 2020, like you said, COVID, and then we had a run up from that low up to the high of 153%. Then we've had another spike up in volume, and we had another run up of 160%. Now, if I take this off and we go on to the reverse side, from that peak to that low, we've got around 50% there. And then we've got from that peak to that low, another 47, say 50%. They're almost exactly the same. And now we go to this one and have a look at that. I mean, you can't get any more repeatable than that. So this is giving us a clue as to what's going to happen next. Like you said, real estate, they've got a bit of a moat in Australia. Whenever you want to go buy a house, basically you go into realestate.com.au. And this is obviously not a commercial for them. It's more of a technical, analysis. But just to finish off, you can see, and this is what we teach students, to recognize these patterns, because they happen time and time again, these topping type patterns that you see here. And then that eventual fall, it falls in a certain way and in a certain structure. And just basically, you can see that what we've applied here is that these falls of 50% coupled by volume, that in itself is already giving us a lot of confirmation that this move down may be over.
Yeah, it's some good advice. All right, if you want more hot stock tips, check out our video. 3 ASX uranium stocks just broke out. Buy now.